we do expect rates to continue their downward slide. There's going to be a big report. I could have you guys all kind of circle the date. It's May 10th. There's going to be a new inflation report coming out on that day that really should be an accumulation of a lot of things. And that will show a pretty big drop, which should drop rates as well. So in the long run, we're going to see a decline, but we will have weeks like this where there's a little bit of a jump. I thought this was pretty.
Hey y'all, Katie here with Team Evoazy, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Hey everybody, welcome to the Monthly Market Update. Hey guys.
Hey.
Hello.
What's up? Happy February.
What's up? Yes. What a great month, a month of love.
Oh dear. So let's talk a little bit about love and pop right into it. Ryan, let's start with rates. How are we doing in that department?
Yeah. So, as we had discussed, our frequent listeners, that they know that we've been banging on the drum that we're predicting rates to go down in 2023. And of course it did, since they peaked in November. We have seen almost a 1% drop in interest rates. So, but as much as we like them to, drop in a straight line, that's not how interest rates work, So
Right.
As they continue to do a full decline, there's weeks where we'll see a little bit of a jump before they start their decline again. And that's exactly what happened over this past week. We did see about a jump of about a quarter now as of today. And there's a few reasons why. As we had spoken about, inflation going up was the main reason that rates went up. And the reason why rates are going to go down is because inflation is dropping. But the January report showed a drop, but it wasn't as much as they were hoping. It was only 0.1%. They were hoping for a little bit more than that. So that was a little bit of a disappointing reading. So it's still going in the right direction, but not as much as they were hoping. And surprisingly, we got a really good jobs report and a really good retail sales report for January. So people are still spending money, and that's not great for inflation. It's good for the economy, but more money out there is not good. So that's why, it's showing that inflation is a little more sticky than we were hoping. And that's why we saw a little bit of an increase, but we do expect rates to continue their downward slide. There's going to be a big report. I could have you guys all kind of circle the date. It's May 10th. There's going to be a new inflation report coming out on that day that really should be an accumulation of a lot of things. And that will show a pretty big drop, which should drop rates as well. So in the long run, we're going to see a decline, but we will have weeks like this where there's a little bit of a jump. And I thought this was pretty interesting. There's a housing expectation survey that's done, and it just came out actually. And this is what they do. They actually survey 150 of the top economists in the country. So a bunch of smart people kind of giving their predictions. So they pay attention to this survey, and what they all expected here, they said 68% did predict that we already are past the highest rates that we've seen. So that they're all in agreement too. And what was interesting as well, they're all in agreement that 23% appreciation that we'll see over the next 5 years in home prices. So if you buy a $500,000 home, this is nationwide, so we don't know what Phoenix is going to look like, but the 150 smartest economists out there feel like we're going to be at 23%. So 500,000 will give you about 115K in appreciation. So not too bad.
No, that's awesome. And, every month I look over the Armless stats. They send a report out. It's a couple pages long. It's packed with lots of information. And let me show you actually, because this definitely is important. So Armless, Michael Orr, he's, they take a lot of information from him. He's the super smart guy at ASU that writes all about real estate here and has for years and years. And check out what they are reporting. An increase is forecasted in February. So right now, guys, for both average sale prices and median sale prices. So so they're predicting that we're starting to go the other way. And throughout the entire report, it's just riddled with, talk about rates. Once rates come down even more, if we see that happen this year, which we're supposed to, right? Or they're saying that we will, then we're going to really see things start to fly in Phoenix again.
Yeah, kind of a perfect storm of inventory being low and rates going down, increasing demand. Yeah, so that's really interesting. I know, Matt, you were mentioning the inventory levels.
Yeah, they're continuing. They're continuing to drop, and it's it's not surprising because we've been talking about this, kind of beating the same drum now for, I don't know, a couple months.
Couple months
And
now.
every indicator that we're looking at it from our own perspective as, as real estate team owners and having our finger on the pulse, and then just really absorbing the bigger picture of our local economy and all of this. And it just, everything was pointing to people are really starting to pick up the message that this is a time to buy. That yeah, rates might be high, but there's no real blood in the streets as far as sellers feeling this obligation to sell their home at a discount. And we saw that, and that's what we've been reflecting on. So I think the fact that we have now consistently have been dropping each week in inventory, and anytime new inventory is added, traditionally it's on a Thursday or Friday of a week, preparing for the weekend of showings. That's when we usually see a little uptick of new stuff being added. And we're seeing that number disappear, plus around 20 to 25% of that number more by the following Tuesday and Wednesday of those new listings. So, and that's been the consistent trend now for months.
I got to show you this because here's another, I'm slide girl today. But here's
There's a lot to
another.
share.
Boogie, woogie, woogie.
I love slides. Here's another one that totally speaks to what you were just saying. It absolutely blew my mind. So new inventory, okay? So these are January stats. New inventory has a month over month increase of 58.9%. So that's how much new inventory we've taken onto the market, right? While the year over year is decreased by almost 8%. So we're 8% less than we were last year. Oh, but wait, there's more. Total inventory has so I just told you new inventory, this is total. Total inventory has a month over month decrease of 1.6%. So we took almost 59% more listings in December, yet our inventory levels reflect a decrease of 1.6%.
Yeah.
Wow.
That's insanity.
It is. And when you really think about what's driving that from the buying side, the demand side, and you really look at who's making up these buyers, there's probably 2/3 are sitting on the fence. They are the investors. We're not seeing them actively moving right now.
Right.
They're, you know what I mean?
Yeah.
They're slowly starting to get in. The smaller investors, the ones that aren't really, we'll say, middlemen to someone giving them a price point or the go ahead to do something. But then you also have the buyers, and which I really think is interesting, especially in Arizona. And I just touched on this in the podcast that I released, I believe, it's getting released yesterday.
It'll be later today.
And,
yeah.
Yeah. And ultimately, it's reflecting on what we experienced in the past and why this has nothing to do with what we're experiencing now. And buyers in Arizona have had PTSD from 2008. We are the hardest hit in the country. Builders, anyone that has to do with real estate was hit so hard that they do not want to make that same mistake twice. And the way I look at it is like when you break a bone, they say, hey, where that fracture happens, it actually becomes stronger after it heals. And I kind of feel like that's exactly what kind of happened in 2008, 10, through 12. That was our fracture, and everyone's remembered it's in the back of their heads. And buyers still have that. So they're like, oh, but the good thing is look who's buying. They're doing it because they're confident. They're looking at it and they're saying, hey, we've seen this thing do full circle. And bravo to them, because I'm pretty sure that they're going to be very happy with the decision of purchasing this year versus waiting for rates to conveniently drop.
Yeah. And I got to tell you, I mean, we as a team, we have a lot of listings. And so we get to see kind of firsthand what's going on and, what we get for calls and things like that. And when we were going through that iffy spot a couple of months ago, I was getting a lot of calls on our listings from investors that were wanting to do really weird things like
creepy seller finance.
Yeah, exactly. And that was the way that they were giving my seller their price and, trying to kind of sell their little creepy, weird ways to my sellers. That has started to dissipate. I'm not getting that anymore. The investor calls that I do get still, just like you said, Matt, it's a lot fewer than I was getting last year. are more on the up and up, are more doing the traditional type purchasing, but it's mostly families.
Yeah.
Mm-hmm.
Mostly families are coming after my
And that's
listings right
awesome.
now.
That's great. You know what I mean? That's great. And I know that a lot of these families are probably like swallowing hard when they're doing it, but it's a great move in my opinion.
I totally agree. And you know, I'm just gonna plain old say it. It sucks that there's all of this fake news out there. There was one article that you had brought to our attention in particular, Matt, a couple of weeks ago. And it's funny because you did like a funny little thing on our Instagram with it was really cute, calling out the BS. But I was not surprised to see that that same article was discussed in the Armless reports this month too. So I have to share it with you just because it's something that was on our social media a couple of weeks ago, and we felt the same that Armless feels. But it was that article that this particular thing shows Yahoo. I think it was, you can find it in several places, but Phoenix could see 2008 like plummet in housing prices. Goldman Sachs report says.
Oh yeah.
What?
I can tell you, I've had dozens of calls when that article came out because it spread quite a bit.
Yeah. And I'm just like, talk about clickbait. So I'm going to read this. Sorry, Matt, but I have to because it's insane. And this is what Tom Ruff, he writes for Armless, has stated. Now compare the market cycle chart to our current news cycle. And depending on the timeliness of the data being reported, a researcher could find a housing report to substantiate any position they want to espouse. My head, it's right? Like you can find support for anything out there right now. My head is still spinning just from researching this stat report. It's like going through a housing news buffet line in Bizarro World where anything and everything is being served. Some national reports are out of date, some are seeking attention, and others are just out of touch. Here's an example of the most egregious. And that's the 2008. And then he goes,
God, it makes me feel good.
Right? Because it's such BS. Yeah. And then he goes on to say, do they even actually remember 2008? It is right. I mean, we remember because I got my license in 2006. So I totally remember that time. But he goes on to say it's absolutely amazing how many times in the past few weeks I've seen and heard the year 2008 bandied about in housing reports. For those that don't remember, 2008 was the epicenter of what is referred to as the Great Recession. The housing bubble burst, caused a global financial crisis. It was the most severe economic recession in the United States since the Great Depression of the 1930s. In 2008, Maricopa County reported upwards of 8,500 new notices of trustee sales recorded in a single month. And actual foreclosures recorded, which are recorded trustee deeds, surpassing 4,500 in a single month. In 2008, by year's end, the median sales price fell 46% from a high in 2006 from 264,800 to a December closing of 143,000. Whether we blame Goldman Sachs for conducting a lazy analysis or the headline editor of Hyperbole, our market is experiencing a needed and necessary market correction, not a crash.
That's so great. And gosh, the corrections seem to happen. It could, if we look back, be very short-lived, obviously, because like you said, what we're seeing with inventory, prices may be ticking up in January. Crazy.
Guess what?
Absolutely. And then I got one more slide, guys. I got one more, and Matt's gonna like this one. I know. I'm gonna let you talk, Matt, I promise. But to speak to your point, Ryan, Tom Ruff kind of put this little graphic in showing the market cycle and showing like the sort of the gauge on the how people felt about the market throughout the last 10 months, right? And he said in the last year, our market has moved from a euphoric seller's market to a balanced market, then to a buyer's market, back to a balanced market. And at present, we are returning to a seller's market.
Yeah.
Again, Michael Orr of the Cromford Report states, the last 10 months have seen the most rapid market cycle in history. But it is becoming clear The worst is now several months behind us. Louder for the people in the back. The appropriate emotional reaction to the market has now changed from despair in December to skepticism in January. We look forward to hope building during March.
That's great. That won't really get the clicks, though, you know, like that Goldman Sachs article got a lot of clicks. So that's what negative news does. But I'm glad we're showing the real news here on this podcast.
Absolutely.
Yeah.
And it's the worst because, you know, I have conversations a lot with especially first-time home buyers, and they're nervous for so many reasons. But then they see articles like this that totally skew, you know, their thoughts on the market and totally just throw a wrench in their spokes as far as, you know, their goals and their trajectory of their timeline of buying and all of that. And like I had a discussion with one the other day that mentioned, oh, we're waiting because the prices are going to fall 15% this year in Phoenix.
Yeah.
What?
We hear that a lot. Yeah.
Where?
Yeah.
Anyway.
Yeah,
I'm obviously passionate about it.
Guess who probably paid for this? Probably like Blackwater and all these large holding companies. You know what I mean? You start to look at who really benefits when the consumer doesn't pick up on these deals and they stand back. You know what I mean? It's not the consumer. It's these large hedge funds and such. And then to what you were saying before, that we are experiencing a correction. Well, guess what? We've already experienced it. We experienced it in September and October of 2022, when we saw all the people that wanted to add their homes to the market when we were accelerating inventory, and then we saw those all pull back because they're like, wait, we don't need to take a bath. We have tons of equity. We have a low rate. We're in an amazing economy. Let's rent. And then all of a sudden, everyone thought the rental market was crashing because there was a shift to the rental market quickly. Well, guess what? Since the end of October, both our rental market and our resale market has dropped almost 30% in inventory. Rental market is still dropping, and the rental market is pretty much the pulse of the confidence as far as what people are willing to pay for home.
Yeah.
And so I think the correction's already happened. And I think that's why we're seeing it. You know, I mean, they're trying to stuff all this bad news down our throats. We're even getting kind of a little bit of a bipolar take on inflation, as you were saying, Ryan. We are going to see volatility in rates, and it's not affecting buyers in Arizona right now. They're just like, okay, we see through this bullshit, which is good. And I hope they tell their friends, and their friends see them. And for once, you know, as they say, the little guy can kind of get an edge on things. But you're not going to get that edge if you freaking mainstream bullshit news. You got to go and get your own news, do your own research.
Numbers are important.
Because we're really seeing a lot of people kind of coming off the fence, but there's still a lot that are just really gun shy. And it's because of those type of articles, you know, and Kate, you went into such depth about how difficult 2008 was for the Valley. It was painful, you know, gosh, I think we're one of the top three, like you mentioned, Matt, the states that really got affected really badly with the downturn in the housing market. And that scar has lasted this long that, you know, as soon as we started seeing things slow down and kind of a shift in the market, everybody really panicked and thought we were going through that again and went into hibernation mode. So I'm glad we're starting to see more and more people come back. And that's why we're seeing this increase in activity. But I do think as the news starts to shift and finally pick up on some of these positives, you know, and rates will continue to drop, like that May report, I think is going to be big as well. We're going to have a pretty busy summer season, I think.
I'm ready.
The crazy thing is like everything that's pointing to us being kind of at the bottom, having like these questions of what's the future going to bring. Have we seen the worst? All this stuff. I think we're going to see a really busy summer, but I think it's just going to keep gaining speed. One of the big things will be inventory. It's when we get down to inventory at a point where it is so low that we then end up having markets like San Francisco and the Bay Area did from 2009 all the way till current, where, you know, the sad part is if you want to buy a home and be competitive in purchasing a home, you are coming with cash to the table.
Right.
There is no such thing as concessions. What people are seeing right now and getting as buyers, being able to get closing costs, getting these things that are contributed by the seller, repairs made to the home, a time frame that fits the buyer's schedule. All those things are going to be going out the window, I have a feeling.
Totally agree. So rates. We talk about it every month, but when the rates fluctuate, especially down, we are definitely seeing a lot of activity and movement in our market. Hold on to your hats for spring, guys.
Yeah, absolutely. And like we always say, I think it's just a really good time to soul search if you're thinking of purchasing, just because, like Ryan said before, you marry the house and you date the rate, and rates will probably end up going down. I doubt we're going to see threes again, at least in the next decade, but I know that we'll see fives, and that's still good.
Which isn't terrible, historically speaking, right? I mean, let's just throw that out there real quick. What span of time in the last, I don't know, couple of decades have we seen such low rates for such a long time?
Yeah, it's been a while. I think, historical average is almost 8%. And so we're below that right now. And Matt's right. I do feel like we'll probably be in the low fives later on this year. So historically speaking, that's very good. We did get spoiled, obviously. And there were different, with the pandemic, there were extenuating circumstances that led to such low rates. But that was just a one-off thing, and now that we're past that, we're kind of getting back to normal levels. It feels high, but this is more considered normal levels.
Absolutely. And this whole fight on inflation is one of the things that I think, from a government stance, I understand. They're trying to control things. I do believe that it is politically aligned when you start to look at if they had an optimal time where things would really take off. I'm sure that fits a political calendar, if that makes sense. But I also look at inflation and I look at just the rate of evolution. It's inevitable. You know what I mean? We're not going to be able to keep prices down. We even look back in the past. We're going to experience it. We really haven't seen it in our lifetimes, right, guys? Like, we've seen it a bit, but not really. Like, most of the things that we've been purchasing and going and doing as adults since we were 20 over the last 20 years have pretty much remained right around the same prices.
Yeah.
So to see things go up is not like, oh my gosh, that's crazy. No, I feel like it's normal, and the government's just kind of sensationalizing that.
Yeah, it's super normal. Like, how many of our grandparents bought their first house for 20 grand?
Yeah.
You know what I mean? Like, things increase, guys. Like, that's how it's always been, and that's how it's always going to be. So good point, Matt.
Yeah. So I just think it's important to then look at where Arizona especially lies when you look at these national reports. As Ryan was pointing out, like, all this stuff that we're being told is like pretty positive, and that's on a national scale. When you look at all the things we have in our basket compared to the other states in America, as far as what's going to contribute to our local economy growth, and what's incentivizing businesses to come here and startups and all that, it's huge. So, not to mention, we have over 300 days of friggin' sunshine. Okay.
Yeah, take that, everybody else in the country.
And then the next thing we'll talk about next time, but is water. And that's another kind of thing, which I'm not sitting here and saying it's not an issue, but it's one of those sensational things that they're really throwing out there and really putting on the forefront of politics as water being this damning thing for Arizona. And yeah, it's an issue, but it's with a bunch of other issues, and it's going to be controllable. I don't just think it has the sensational currency that they're giving it at this point. Once again, I'm not saying, hey, go out there and just blatantly get a bunch of grass and overfill your pool and take 6-hour showers. No, I just don't think it's like the sky is falling, where a lot of people like to say that about Arizona. If you say moving it, what about the water? And it's like, no.
Yeah.
So
totally agree. You know what, guys? We have a ton of real estate information over on our YouTube channel. We have over 1,000 videos on our YouTube channel. It is at Team Evo AZ is our handle. Go over there and check it out, guys, especially if you're on the fence about buying. You can watch the entire last year of our monthly market update, and you can see each month as we are reporting kind of what's going on. And it really, you can really see the trend there. You also scroll down just a little bit, you'll see Matt's podcast, and that is a monthly podcast, and there's a ton of information in that as well. The neighborhood news, Tip Tuesday, like there's just so much stuff on our YouTube, guys. Go and check it out. Do your own research, run your own numbers, make sure that you are doing the homework that you should be doing, and of course, connect yourselves with some really great agents that are super experienced and knowledgeable, especially in this area. I know a couple of them if you need some help with that. If you are more of the audio version type, hop on over to your favorite podcast platform and do a quick search for Arizona Real Estate Radio, like it, download the episodes, hit the notification button. So then that way, every time we drop a new show, you will be notified. The next show to drop is going to be Matt's podcast that he just referenced. Apparently it's action packed and full of juiciness. I am about to edit that here in just a few. So I'll
Two
see.
parts. 2 parts.
Yeah, wait to listen to it, Matt.
All right, guys. Thanks
Awesome.
again. Have a wonderful month.
Always,
Bye,
always a
everyone.
pleasure, guys.
Thank you.
Thanks, Ryan. Bye, guys.
Bye.
Bye.